Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Thanks for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the Silicon Valley corporate headquarters of Wilson Investment Properties, the sponsor of Real Estate Radio Power Investing. I'm Tom K. Wilson, your host for this weekly program on multifamily and commercial investing and syndications. If you can't make the live show, you can catch your podcast on tomwilsonproperties.com. Go to BACOMM.club, that's BACOMM.club, for information on a free monthly education meetup venue on commercial and multifamily investing with world-class speakers. And in fact, this program is going to feature BACOMM, and we're going to talk to you about the leading venue for commercial and multifamily syndications in Northern California and possibly the country. Today we're bringing on in our studio guest Jennifer Zhang, who is our Director of Marketing at Wilson Investment Properties, who's the President of BACOMM, and who's had an education and degree from UCLA, and has been with Wilson Investment Properties for almost 3 years now. So, Jennifer, welcome to the program.
Thanks for having me on, Tom.
So Jen, how in the world did you go from fine art degree to real estate? Can you talk to us about that?
Yeah, it's a very logical transition, right?
Oh, sure, okay.
So when
probably even more remarkable than going from engineering or a high-tech degree.
That's right.
to investing.
So when I got out of art school, I had been interning at the galleries when I was in school, and I knew that this wasn't a long-term career path. And being a standalone artist was also not looking so good in my future. I ended up taking a multi-level sales position and doing that for 2 years. And in the process, I learned how to start a business from scratch and hire and train and sell and be very comfortable with getting no's and just being an entrepreneur, really. And I ended up meeting an art dealer who had already retired from the money he'd made in his Wall Street career. And he also collected paintings. And he said, well, with your background in fine art and your ability to start a business from scratch, why don't we partner together and start an art gallery where we auction off paintings? And so from there, I learned about working with investors. The paintings were probably around $25,000 to $50,000 price point, so similar to what we're doing today, and just learning to buy at auction low and resell at auction high. And from there, I saw an Instagram ad with Robert Kiyosaki's face on it. And at the time, I was a huge Rich Dad, Poor Dad and all of his books, all of those Purple Books fan. And I show up to the seminar. I pay the $40,000 on credit cards that I did not have before that weekend and jump 2 feet in on how to flip homes with zero money down and make a bunch of money back.
Who would have guessed that a few years later you would wind up knowing Robert Kiyosaki and spending almost a week a year for 2 years, now coming up on 3 years.
I dreamed of meeting him and maybe getting a book signed by him a couple of years back. It's amazing. Well,
that's certainly an exciting story. Many listeners might say, my gosh, how in the world does someone get the confidence and poise to start a business and be an entrepreneur so early? What would you say was a crossroad or something that inspired you to want to be an entrepreneur?
I think it was the book Rich Dad, Poor Dad, to be honest. It really shifted my mentality, and I was subscribing to a lot of just motivational quotes and videos. And the idea of having my own time and financial flexibility was really interesting for me. However, I found that there was a distinction between being an S quadrant business owner and a B quadrant business owner. I actually was just the owner of my own job at a certain point. I was working longer hours. I was working harder and making less money actually managing a team in the multi-level sales business. So
And it's certainly a big difference in multi-level business, sales business that you're in, and being in the fine arts business where you had price tags of products that you were selling for $25,000-$50,000. Mm-hmm. So you got quite an exposure to a breadth of types of businesses within a short period of time.
Yeah. I actually wrote a chapter in a #1 bestseller on Amazon called The One Thing That Changed Everything. And in that chapter, I write about going from a very proud, do-it-yourself entrepreneur mentality to actually joining a team of people who are aligned with what I want to do in life and making a bigger difference on more people, even as an employee or an entrepreneur for an employer.
Well, you certainly, within Wilson Investment Properties, have certainly shown your entrepreneur skills and desire, and certainly has made wonderful contribution to our business. Tell us a little bit about, tell the audience about that transition.
Sure. So I actually met you, Tom, through 4 points of contacts because I was trying to network at every real estate club I could when I was starting out. And when I first reached out to you, you probably remember this, you said you were looking for someone with more real estate experience. And I didn't have that, but I was willing to, do anything and learn. And you hired me as a 2-month temporary executive assistant / admin. And
you did do anything, and you did learn like a rocket ship.
And I remember a lot of the things I was doing were very... I could train somebody else to do those things. And so 2 weeks into the job, I asked you if I could hire myself a virtual assistant. And I hired myself a virtual assistant in India who is still to this day with our company and an amazing addition to our team.
Indeed.
And so that freed up the time that I had to learn more about the business, about commercial real estate and syndications, because during that time you were transitioning from being a rental home turnkey provider to syndicating commercial properties. So I got to learn how to speak to investors about commercial real estate and also do some marketing for the company and do a lot of the events that we do with investors.
I'd like to share with our audience also and our listeners about why I was willing to hire someone without any real estate experience when that was one of the primary characteristics I was originally looking for. Beth Clifford, whom we've had on the radio program and who has spoken before at BACOMM, had been a longtime friend, I think going on 9 years now, was certainly a multinational and multi-billion-dollar developer who I've highly respected. I never forgot, took me a while to implement it, that she told me at one point that her business went to a next level when she started focusing more on gathering people around her and partners and employees for whom character was more important than competence. So once I started looking for team members who had high aptitude, high character, inspirational, creative, and had a high work ethic, things really went up for our business, because it turns out that most technical skills can be taught, but it's pretty hard to teach character.
Thanks, Tom.
Yeah. So you've been a great team member. So let's tell a story about how BACOMM started.
Sure. So one of the people who I met in LA ended up becoming my real estate mentor. And she was speaking at a club at an event in Vegas hosted by her mentor. His name was Greg Pinio. And I revisited that same meeting a year later after just starting working for Tom, and he said something along the lines of, if you're able, you're obligated. Meaning it's up to you to cause whatever it is that makes a difference. Don't wait for someone else to do it. And when I was in multi-level sales, I was actually doing product roadshow demos. I was like a live QVC for hair irons and skincare and car wax and kitchen utensils.
I still want to see some videos of that. Must be something on YouTube.
Today only, while we're here. Yeah, that's what I was doing. And so I had event planning skills. I knew a lot of real estate experts from being active in networking. And I also knew that a lot of these real estate clubs focused on rental homes or maybe private lending or maybe multifamily investing. And what a lot of investors don't know is that you could start with investing in commercial and multifamily properties and get all the benefits and high returns that those types of investments have to offer. You don't have to start with a rental home and then work your way up to a duplex and then maybe a small multifamily. And then someday, maybe if you want to play with the institutions, you get to commercial. So I saw that there was a need, and that's why I proposed to Tom, let's start this club.
Let's go talk about that a little bit more when we come back right after the break. Stay with us on Real Estate Radio Power Investing.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
So welcome back to Real Estate Radio Power Investing. We've got Jennifer Zhang with us today in the studio talking about her career and how she got involved in starting the premier venue and club for the Bay Area commercial and multifam kind of business and syndications. So you came to me saying at one point, I remember that, Tom, I know you've talked for some time about wanting to start a club. You love education, you love sharing what you've learned with others, and the problem, I think, is that that it takes a lot of work. So my recollection was that you said, well, Tom, I think it's just something that should be done, and I'd love to do it for you. So I said, you go.
Yeah. You know what was really confronting for me about what Greg said, if you're able, you're obligated, is I had so many reasons why it shouldn't be me come up. Like for me, starting off in commercial real estate, my perception about it is that it's this good old boys club, and who am I, this 23-year-old girl, to be an authority figure or make a contribution in our industry. I need to have the track record first. I need to have the number of years of experience in the field. I need to have the right network. I need to, be more established before I can go and do something. But what I saw after what Greg said and why this was so important for me is I don't need to be the expert. I know experts. I know beginners. I know how to book a venue and, have a sponsor. And Wilson Investment Properties has been very generous in sponsoring this entire club. And then put it on Meetup and 150 people show up the first month. And it's been that way ever since. That
was pretty exciting, wasn't it?
It was amazing.
We weren't sure how many it would draw, but we thought, well, it's like we've heard a number of entrepreneurs in Silicon Valley say, if it's a great idea, it's worth testing. Mm-hmm. So we thought, well, this is something that we know a lot of people would benefit from. Whether or not they will be drawn to it to listen, we don't know. And they showed up.
And they keep showing up.
Yeah, they do. So maybe talk a little bit about what's unique about this club and why you think it's successful, and a little bit about the format and what do we present? What's in it for someone who shows up? What do they get?
Sure. So the mission of BACOMM is to empower investors of all experience levels to gain the tools and knowledge to evaluate and invest in commercial and multifamily properties. So a lot of the education, like I said, out there for real estate investors is about residential and private loans and things like that. And there is education about commercial investing, but it's mostly targeted for already seasoned brokers and investors. There isn't general education for the everyday mainstream investor. And a lot of the people who invest in our companies, before they met us, they had no idea that this was an option.
In fact, what we're learning, I believe, is that majority of investors don't even know this is an option.
Exactly. Right. And so people who show up can, come and learn about a wide range of topics directly applying to commercial real estate, such as, how do leases work? How does land entitlement work? How do you syndicate a commercial property? Or there's topics related to investing in commercial real estate, such as what is the new tax law's impact on real estate investing, and things like that.
Maybe this is a good point to tell our listeners a little bit about the definition of commercial, because I think we've learned that that's ambiguous.
Sure, and it's very funny because we add the word multifamily in the name of the club because most people don't affiliate multifamily with commercial real estate. So commercial real estate includes retail, industrial, office, large multifamily, 5 and above. And
specialized multifamily, like
right.
Assisted living and so forth.
That's right, yeah. Hospitality, land development. So it covers a lot of things.
It does. Student housing, etc. A lot of people forget how many different versions of residential properties there are and asset classes there are out there. Mm-hmm. So I think the key is that helps people remember is that the root of commercial is commerce. So it's any real estate investment for which its primary intent is for commerce to earn money, to bring in money, as opposed to someone to live in and raise their family. Mm-hmm. So it's only been in recent years that the houses even became a separate asset class, and certainly a lot of people jumped on that bandwagon, and then they find out that owning a lot of houses is certainly a viable approach, but it's not quite as passive as they thought it might be. Mm-hmm. So talk a little bit more about what the format of a typical meeting is.
Sure. So in the beginning of the meetings, we normally do a market update, which is a highlight of what's been going on in the economy. We've been following Amazon's headquarter 2 search. We've been following the trade wars. We've been following what's been going on globally with Italy and Turkey, and all the way down to what's happening in our local markets. And also technological trends too, like how a lot of real estate is being run by artificial intelligence, or how buildings are being 3D printed. So just really high level, what's going on in the world and the context within which real estate in our national economy down to our local economy, how that's shaped.
And what I like too is, even though I think it's a wonderful newsletter that we put out every other week from the sponsor, Wilson Investment Properties, that's certainly gives some highlights, but in the BACOMM meeting, you were able to present a much more in-depth view at some of these key elements that are there, and that's certainly been received very, very well. Mm-hmm.
And after the market update, I've just started implementing this, but because we have people who show up from all experience levels, from the people who only know about residential or just getting started investing, to the people who are syndicating their own deals or been commercial brokers for decades, I started having breakout sessions on various topics. Like, to use this past meeting as an example, Tom, you were covering how to transition from rental homes into investing in commercial. And we had one of our commercial brokers host a breakout session about just the fundamentals of commercial real estate. And we had someone else hosting a session about syndicating commercial real estate. And so every person who shows up, no matter what level they're at, gets a customized experience.
That was very well received. And I think you've decided that it was popular enough. We'll probably continue that.
Yeah, absolutely. Yep. Mm-hmm. And then we generally have one speaker, one guest speaker per month. We have awesome raffle prizes once in a while. We gave out a signed copy of Rich Dad Poor Dad by both Robert and Kim. Yeah.
Want to just share a few of the speakers that we've had last year, which was the inaugural year for BACOMM. Started last January of 2018. Mm-hmm. We started the second year, so I want to mention a few speakers.
Sure. We've had speakers, all kinds of speakers come out and speak. Most noteworthy is Dr. Doug Duncan. He's the chief economist and senior executive vice president at Fannie Mae. And he came and gave a market forecast to an audience of about 300, and he'll be doing it again this May.
And Dr. Duncan is certainly ranked by a number of organizations as being one of the most accurate forecasters in the country. So, of course, we always want to know what the crystal ball says from someone who's been accurate in the past. And so we're looking forward to that one again.
Yep, and as you've mentioned, we've had Beth Clifford come out, $15 billion developer, talking about hospitality and investing internationally and just how to build a A-class team. We've had also topics such as environmentally sustainable commercial real estate. How do you make green improvements to your real estate without incurring extra costs? We've had lenders come in and talk about the basics of commercial real estate lending, which is very different from residential lending. We've had some women talk about what it's like to start off in a man's industry. We've had people come in and talk about how leases work, market data analysis, underwriting. We've had a rep from CoStar come in and just give a overview of all of the Bay Area commercial real estate market statistics. And we'll be doing it again this year because it was so well received.
And don't forget about our dirt guy.
Oh, and our dirt guy, of course, yeah. Cameron Stewart, he came in and talked about entitlement and how land development, acquisition, all of that works because it's just such a little known topic to most people. And it's a long, long list of things that a person needs to go through to turn raw land into buildable land.
Yeah, I think the average personal investor thinks, oh, well, maybe you rezone it and then you go get the permit. Well, it's a little bit more than that. All right. Okay, we'll going to pause right there on Real Estate Radio Power Investing, and we'll be back with Jennifer Zhang and ask her some more about BACOMM and the whole world of commercial real estate investing. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back to Real Estate Radio Power Investing. Today we have Jennifer Zhang with us, the Director of Marketing at Wilson Investment Properties, and the president of BACOMM, Bay Area Commercial and Multifam .club, which you can go to get information on when the next meetings are and what who the guest speakers are and so forth. So Jennifer, what would you say our audience is? What kind of audience do you get at BACOMM? Who are the people that show up and why?
Yeah, so normally at our monthly meetings, which are generally last or fourth Thursdays of the month, we have anywhere between 100 to 150 people showing up. Sometimes we do large events, which I'll talk about later, where up to 300 will show up. And the types of people that come, again, since it is for all experience levels, we do have people who have been in the commercial real estate industry for a long time, who are doing it themselves, either as brokers or investors. And I would say a large majority of the people who come are people with day jobs as engineers or something else in tech, coming to learn about how they could ask the right questions when vetting a source of commercial investments. Maybe not people who want to do it themselves, but people who want to invest passively.
But they need to be educated enough so they can make good decisions and ask good questions. Right?
Exactly, yeah.
Don't even, it's, when you haven't been in any kind of industry or area of education, the first thing to do is to know what to ask. Right?
That's right.
And most of the folks, I think, in the real estate investing arena don't have maybe passed by commercial and multifam properties because they're expensive. And a lot of people either don't have the money to buy one, or they just don't, even if they do, they don't want to put too many eggs in one basket.
Or they can't qualify for the loan or whatever it is.
Mm-hmm. Yep. So, as it turns out, you don't have to purchase an entire commercial or multifam property to participate in the benefits that large private investors and institutional investors are taken advantage of. Let's talk a little bit about syndication.
Yeah. Actually, Tom, would you like to talk a little about syndication?
Oh, sure. One of my favorite topics, for sure. So syndication, a lot of people are worried that it's too complicated and it sounds too good to be true. And, is this really legal? Mm-hmm. And we get all kinds of crazy questions. So I say, well, first of all, syndication is sort of the traditional word for what popularly nowadays is called crowdfunding. Mm-hmm. And I like to point out the example of probably an early syndication was two families in Egypt buying a goat or cow together and sharing the milk, and that was a syndication. Mm-hmm. So syndication is simply a number of people, two or more, who put together their investment funds for a common cause, and they share the benefits. Mm-hmm. So that's simple indeed. If you go to TomWilsonProperties.com, which is Wilson Investment Properties website, there are a couple of videos on there that only last a minute apiece. That's and right. They tell very, very succinctly what a syndication is and how the returns are distributed. Mm-hmm. Maybe we should just talk about that a little bit.
Sure.
So our typical syndication that Wilson Investment Properties offers to our investors is $50,000 a share. Well, shoot, that's kind of a typical down payment for a rental house.
That's right.
Doesn't mean we don't like rental houses. They've certainly contributed to my success and growth. But after you have to accumulate quite a few of them in order to provide a decent retirement, and not quite as passive as most people initially would like them to think they are or would like them to be. So through a syndication, you can invest a similar amount of money and participate in a much larger property, commercial and multifam. So I think maybe you can talk just a little bit about the process of how do you invest in a syndication. Talk about the PPM and the subscription.
Yeah, so there's a lot of companies out there that only offer their investments to accredited investors, which has a minimum net worth or income requirement. What I like about our company is that we do have investments available to both accredited and sophisticated investors. So as long as they are within our network. And as Tom said earlier, if you'd like to participate in such projects, contact us through TomWilsonProperties.com. Our syndications are regulated by the SEC, and investors subscribe with a private placement memorandum. So once those are signed and approved by us and funded, then the investor is actually a legal owner of the LLC that holds the property. So that's why we call ourselves a direct provider rather than someone who lists an investment like most of these new tech crowdfunding sites do.
Yeah, so we're not a dealer broker. We're offering, we're basically a boutique syndicator that allows the investors to pick and choose which specific asset classes and which markets they want to invest in. We have many, many investors who have invested in a number of our syndications, and they may skip some, and others they want to be a part of. And they range from stabilized products that are in all of the different asset classes to development ones that have lower or no cash flow but high potential returns. But the majority of the ones that we offer have stable returns on a regular basis, and we generally offer preferred returns, which means that you get that amount back before the sponsors get to participate in any of the profits upon exit. Mm-hmm. Might also say a typical hold period is 5 to 7 years, and some are complete in 2 or 3 and some in 10. So again, different people have different objectives about when they would like to get their return of their investment.
That's one of the great things about coming to a focused group like BACOMM is people who don't really know about commercial real estate get to learn what these terms mean and to find out what they like or don't like about things to add to their portfolio. And Wilson Investment Properties team is always there to speak to people who are interested in investing if they have any questions.
most people think they understand multifam. Turns out it's a lot more complex than it appears. And I think that perception is because everybody has rented a place or rented out a place, and they seems to be it feels comfortable that you know what it's like to be in a residential property or to have one. Even a multifam property, though, has a lot more moving parts and a lot more complex than people realize. And I think a lot of people don't look at or consider non-multifam commercial properties because they're not as familiar with it.
You've even said before that a multifamily is more similar to a multi-tenant retail or industrial than it is to a lot of residentials, right?
Yeah. And you often hear folks say, well, everybody has to live somewhere, so that's why I like a multifam. And don't get it wrong, I like multifam too. I've owned, I think, 10 of them. Mm-hmm. But again, the reason people live where they live is because of all the non-multifam commercial that surrounds them, mm-hmm. where they work, where they shop, where they get education and so forth. So it's a very exciting new area and arena for investors to consider, especially when they learn that they can invest a similar amount that they do in a rental house. So with that, we'll pause and take a break here on Real Estate Radio Power Investing. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back to Real Estate Radio Power Investing, where today we're discussing the venue BACOMM, Bay Area Commercial and Multifam Club, which is the primary and leading venue in Northern California to educate everyone about commercial and multifam properties and how you can invest in them through syndications for similar amounts per share as you would put for a down payment for a rental house. So we certainly get a lot of people now, Jennifer, that own real estate. Many of our clients are in California where there's been a lot of appreciation, mm-hmm. have a lot of equity built up. Mm-hmm. They'd like to take some of that money off the table and do something else with it, but they don't want to pay capital gains.
Right.
So we have learned that there's lots of ways other than just 1031, which most real estate investors are familiar with, to do that. And in order to exchange from a real estate property, a real property, into syndication means that you're going into securities. Mm-hmm. So a 1031 doesn't do that, but there are other ways that you can. So therefore, you came up with the idea a few months ago that would be a good area for people to learn about.
Yeah, so a 1031 exchange is really great because you get to defer capital gains with properties to properties, and you have to identify a property within 45 days and close on it in 180 days, right? And
it's certainly very viable. I've done about 40 of them, and all of them successful. I've never fallen out, but boy, the pressure's on to that 45-day identification, and if you're looking for something in another piece of property in a hot market, it's a lot of people wind up buying something that is really not all that great just mm-hmm. so they don't pay the tax. Let's go talk about that a little bit more when we come back right after the break. Stay with us on Real Estate Radio Power Investing.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
So welcome back to Real Estate Radio Power Investing. So Jennifer, it's certainly a unique area, topic that there are not too many experts on. There are a lot of folks in the 1031 business, but not the others. Can you let us know just a little bit about whom the speakers on the panel will be and what their expertise is?
Yep. So I have Thomas Battenberg, who is IPX 1031's Northern California manager and also VP of the company. So he really understands 1031 exchange, one of the largest 1031 exchange accommodators. He'll also be covering other strategies such as Delaware statutory trust, triple net lease and TICs and other types of partnerships, tenants in common. And then I have Ruth Van Derstein, who is a credit counselor and also has been a capital gains tax strategist with over 2.5 decades of experience. She also is a 1031 exchange accommodator and will be our primary representative for the monetized installment sale. And lastly, I have Carl Warden, who really represents a large range of tax deferral strategies. He'll be our primary representative for the Deferred Sales Trust, although he will also be talking about how it compares with 1031 exchange. He also does accommodate those, as well as conservation easements and opportunity zones he can touch upon, and also retirement-held corporations.
Okay, good. Well, you've put together quite a team of experts, and I think that's going to be probably going to run out of time and have more questions, but I think it'll be a wonderful event where people will get exposed to things that they will save them a lot of money that they haven't known about before.
Right, and you can always find more information about their bios and about the event at www.BACOMM.club.
And in addition to that, we encourage you to go to Wilson Investment Properties on TomWilsonProperties.com and sign up for that newsletter, which comes out every 2 weeks. Keeps you up to date on what's going on in major economic news as it relates to real estate. And maybe even more importantly, it gives you notification and access to syndications, which normally are only available to those who've signed up with us per SEC regulations. So by signing up with us, you'll get a lot of education information about it. You can see all of our radio shows by going on that website. A lot of education information on that website, as well as giving you access to new syndications. So thanks for being with us, Jennifer, today.
Thank you.
And we look forward to this very exciting panel that's coming up and all the other BACOMM events this year. So thank you, listeners, for being with us. And remember, the only thing that matters is what you do next.